With R&D and with research and development tax credits, it used to be a high-risk position, or because it was temporary, because nobody knew what to do with it. And so up until 2012, it was a Tier 1 audit issue. But after they got rid of the classification system, it opened the doors for small businesses and more businesses in general to be able to claim this research and development tax credit because there wasn't a substantial audit risk.
Hello, SaaS leaders. Welcome to Swattage, the Software Innovation Lab. If you're new here, my name is Dale Richards. I'm a software innovator from Salt Lake City, Utah, and I love making software that changes the world. I'm interviewing top experts on the cutting edge of SaaS leadership and sharing their insights with you. If you want to foster innovation, cultivate your culture, and disrupt the market with new software products that change the world, start now by subscribing and hitting the bell. Okay, so why do you have to have special knowledge about the R&D tax credit? Like, why isn't my CPA handling this for me and advising me on it?
CPAs are great. I'm a CPA myself. I spent years going to school, taking the exams, getting certified, doing continuing education. It is next to impossible to be an expert in all 70,000 pages of federal tax code. I don't know if you've ever sat down to read it, but it's impossible, I promise you. And on top of that, being also able to understand all the state legislation that's going on and all the state tax code, all the tax cases, there's too much. That's why CPA firms, your large CPA firms, there's experts within those firms. They have subdivisions in CPA firms to help tell you that you need these credits. The problem is that only probably the top 15 to 20 tax firms in the entire country have teams that specialize in research and development. So all of your other CPAs, all of your other CPA firms are relying upon outside counsel in order to help their clients. So you work with a specialist similar to you go to the doctor every year, right? We go to your general practitioner, you get your checkup, they say, hey, are you feeling healthy today? Get your flu shot, whatever the case may be. And that's an annual thing. Those are your compliance folks. That's your tax compliance. They file your return. And they do a great job. They're experts in what they do. But when you go and you have surgery, or when you go and you want to get fit and you need to go to a nutritionalist, it's a separate set of skills. And I relate that to R&D as well. I've spent years focusing entirely on one tax credit to become an expert, to make sure I know the ins and outs of what kind of documents you need, what the IRS is going to look for, because ultimately the burden of proof is on the taxpayer. Whenever you file your taxes, it's on you. And so for you to make sure that you're in compliance with claiming all these credits and deductions and minimizing your tax liability, you need to go to somebody that understands.
So you're kind of like the spinal specialist of taxes.
We try and think about it more as like a nutritionalist. We want it to be a positive experience, right? Like you're having brain surgery, but it's fine.
Okay, what about audit risk? If my company does this for the first time, I don't want to get hit hard by the IRS. Like, what insights can you share about that?
People think about audits, and that's kind of the big concern. That's why they don't go after new things, or that's why they don't take positions. And they're happy to essentially pay the government a premium in order to reduce their audit risk. At least that's what they think, right? I'm not going to take any risky positions. You can edit all that, right? They're not going to take any risky positions because they want to make sure that they are compliant. They're overpaying. Well, for most of us, we've gotten to the point where we understand that audits are going to happen one way or the other. And the IRS used to have what was a tiered audit structure. So if you were to claim certain credits, or if you were to claim a certain amount of revenue, you got put into a bracket for audit risk, right? And they said, hey, if you're a tier 1 issue, you are going to be audited every year. If you're a tier 5, it might be once every 50 years or less because you're not a high risk, or they might not make any money off of you, right? That's why you don't see audits on someone who's 18 years old with $5,000 in income. There's just no money to go after for the IRS, so they're not going to waste their resources. With R&D and with research and development tax credits, it used to be a high-risk position, right? Because it was temporary, because nobody knew what to do with it. And so up until 2012, it was a Tier 1 audit issue. But after they got rid of the classification system, it opened the doors for small businesses and more businesses in general to be able to claim this research and development tax credit because there wasn't a substantial audit risk. Didn't require substantial amount of CPA help at the end of the day to back end all of this. So your time, your money, your expenses that you're spending towards making your business better, they come back to you instead of getting spent to the government.
Join us again every Friday at 10 a.m. Mountain Time for more interviews and content right here on Swattage, the Software Innovation Lab. We'll see you next time.